welcome to ICICIdirect. Today, we're going to tell you everything you need to know about Mahindra Manulife REIT Fund, the NFO, which opens the 28th of September and closes on the 12th of October. Joining us on the show is Mr. Ashutosh Bishnoi, MD and CEO, Mahindra Manulife Mutual Fund. Thank you, Mr. Bishnoi, for joining us today on the show. Begin with Ashutosh. Why do you think the Asia Pacific REIT Fund is relevant in the current market scenario?
Thank you, Samina, for having me. So, if you look at the real estate market, with which almost every Indian is extremely familiar, right? It is the principal investment that every Indian household has and desires to have. It's a very interesting situation in the market now where, absent from availability for a very liquid type of investment in India, is real estate. We can buy a home if you can afford to and if you can get a loan to, but you cannot participate from the benefits of investing in real estate easily like you can in a mutual fund or you can in a stock market. So REITs come into play, and Asia Pacific is a market where REITs, which provide an access into real estate investments via a listed entity, have been available in Asia Pacific for more than 20 years. Right. It's a market that is approximately $300 billion in terms of market cap, besides the equity markets, and has more or less about 200 different REITs available between Singapore, Australia, Hong Kong. These are three big markets, and I'm not even talking of Japan, right? So clearly, it's a well-flourishing big market offering very good returns to investors. Returns tend to be better than fixed income, right, because most REITs are like they pay out dividends. They invest in properties which are rent yielding, they collect the rent and they pay it out. But there are interesting REIT funds like the one we will offer, and we'll talk about it, where there is an additional opportunity for capital gains. But clearly, it's a large market, does not exist in India, and has a very good track record of offering returns which are far, far better than inflation, better than fixed income. And interestingly, it is counter-cyclical to fixed income. And in fact, the US 10-year bond yield, when you compare it to the yields of Asia-Pacific REITs, you find they move in the opposite directions. So it's a nice play to add to your portfolio.
Ashutosh, help us understand this better, right? How is this any different from directly investing into listed India REITs, or rather Indian REITs?
Good. I'm glad you asked that question. So the first part of the answer is there is such little opportunity in India in REITs. There are only 3 listed REITs, and all of them together are not more than a year and a half from the time they listed, which is not to say they will not do well in the future. But here are some other facts. Each of the REITs that are currently listed today have a unique geographical concentration. So, for example, in one of the REITs, you get Bombay and Pune and nothing else. Right. Another REIT, you get Delhi and Calcutta, but nothing else. In yet another REIT, you get a little bit of Bombay and a lot of Hyderabad. So they really become geographical plays. If you want a good play, you have to have everything. Besides, these are REITs which pay out 90% of their cash flow. And it comes to you as a dividend, which is taxable in your hands and taxable at your current rate of income tax, right, which could be anywhere between 20% to almost 36-37% now. So therefore, investing outside India in a REIT makes sense because you don't get paid interest there. You don't get paid dividend there. Whatever is the dividend gets added back as capital gains. And you get the advantage of taking capital gains benefit in India on the similar kind of investment. So while you could invest in Indian REITs, you would remember that it's not a long market. It's not been there long enough. Plus, it has geographical concentration issues, and then the taxation is not really very beneficial.
Those are 3 very compelling reasons why one must look at this. Let's talk about the portfolio strategy then for the master fund, which is Manulife Asia Pacific REIT Fund. Does this fund, Ashutosh, invest 100% into listed entities then, listed REITs?
Well, this particular fund actually differs from most of its peers. So first of all, it's a mutual fund.
Right.
The underlying asset is the listed REITs. Okay. And it has approximately, if I'm not wrong, about 45 holdings.
Right.
Across Singapore, Hong Kong, Australia, and a little bit in Malaysia and other places. But principally, it invests in Singapore. About 50% of the money is in Singapore REITs. Now, REITs form about 70% of the mandated investment allocation. The fund can, if it wants to, the fund manager can put up to 30% in listed real estate stocks as well.
Okay.
Now, that gives the opportunity of capital gains.
Right.
Right. So, listed real estate stocks in Asia Pacific are numerous. I mean, some of us who've been there long enough remember that at one point in time, the entire Hong Kong stock market was nothing but listed properties.
Yeah.
So it's a very long established markets of real estate. They give you the opportunity of putting money elsewhere besides REITs, because REITs tend to pay out dividends and all the cash flow is paid out.
Right.
But you can get capital gains elsewhere. As we speak, this particular fund has 20% exposure outside of REITs in listed property markets.
You've already alluded to some of the points to the next question I'm going to ask you, but for more detail, what are the various types of REITs that the master fund invests into, Ashutosh?
Sure. So the master fund holds REITs across a spectrum.
Okay.
In fact, that's again something that's missing from India. So for example, one of the important holdings at this point in time is healthcare REITs.
Oh, okay.
Okay, because they are really benefiting a lot. I mean, if I recall correctly, in the last 1 year, Asia Pacific healthcare REITs have given a return of close to 12 to 13%.
Wow.
So obviously, because of the way the pandemic went, then there are specialized industrial REITs which also did very well because the whole economy shifted to digital, right? So what became important is warehousing and logistics.
Yeah.
Certainly, there was a huge demand for those, and this fund is invested in those kinds of industrial properties as well, industrial REITs. Then there is the commercial, or what we call retail in India.
Right.
And there they've taken care not to invest in very large shopping districts kind of retail, but in suburban malls. So, which never really shut down, even with the pandemic, because they were, providing essential goods. Then, of course, there are, hospitality REITs, which of course suffered. So there is a whole bunch of REITs that this particular fund invests in. And like I said, at this point in time, it has about 45 different holdings across Asia Pacific.
You did mention, Ashutosh, that Singapore was an important allocation for the fund, but extend that conversation further and tell us more about the geographical investment allocation of the fund.
Sure. So at this point in time, the way the fund is invested, it is approximately 55% of its exposure is to Singapore.
Yeah.
Another close to 20% is to Hong Kong. And I think, if I recall correctly, about 10 to 12% is to Australia. And then there is Malaysia with about 4% and Thailand with about 3%. So the principal three are at this point in time Singapore, Hong Kong, and Australia. And between them, the total return that they have given in the last 1 year in this fund, as we speak of the last quarter ending, is approximately 14%.
Wow.
And since inception return is about 13.5%. So obviously, this is a fund manager who is playing well between REITs and non-REITs both. Otherwise, if you take Asia Pacific REITs index, the return would probably be in the region of about 7 or 8%. That's at the index level.
Right.
But because the fund manager is playing in some specialized REITs and playing also in the equities of property market, he is able to actually extend the return well beyond the single digits.
Right. Lastly, Ashutosh, REIT is a relatively new product category for the Indian investor. While, of course, real estate is such a primary investment, this product category is very new for Indians. What would your message be to retail investors?
So I'm glad you asked that because, a lot of people have been telling me, why are you doing this? So I have a very simple proposition for a retail investor who's enamored of real estate. For as little as 5,000 rupees, you can participate in the real estate and property markets of entire Asia Pacific, right? Singapore, Hong Kong, Australia, others, Malaysia, Thailand, etc. Besides, if you look at the returns, consistently, if you're going to get this kind of returns which this fund has been giving, on top of this, because it's a master feeder structure and sending money outside India, you should not forget to add over a reasonable period, I would say 3 to 4 years, that our currency deteriorates.
You're right.
We have a 47-year track record, at least data I have, of INR, Indian rupee, deteriorating by about 4% consistently against USD. You add that back, and then you add the benefit of being able to take capital gains advantage, which in this case is not equities. It is non-equity capital gains. If you hold it for 3 years, you pay 20% on the capital gain, but you have the benefit of indexation. So actually, your net tax incidence is extremely low. So for all the reasons that you can participate in the most flourishing real estate market of the world, get decent returns, add to that your addition of the currency difference, and taxation, I think it makes into a very nice package. Yes, of course, you could continue to invest in equities or debt in India at this point in time and think about, is this market overvalued? That's a question in a lot of people's mind. Is fixed income going to give me a decent return because people are now talking about rates going up? So it's a good time also to think about allocating some of your money in this kind of an interesting opportunity. So that's my message to Indian investors, and I hope to see you there.
So if you're looking for a tax-efficient, higher returns than fixed income and an opportunity to play the Asia Pacific real estate market, look no further than the Mahindra Manulife REIT Fund. The NFO opens on the 28th of September and closes on the 12th of October. Thank you for watching.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.